Hey there. I hope you're having a great day. It's Monday, 22nd of April, year of our Lord 2024. I think it's the 22nd. Yeah, it is the 22nd of April, and it's Monday, and I wanted to do a quick market update. So I am going to attempt to stick to the outline of this video. If I do that, it'll be about a 10-minute video with an introduction to weekly market trends and then a kind of a peek at the stock market performance over the last week, the impact of the Middle East, geopolitical events, and also Treasury yields and monetary policy. That's been a big mover of the markets. We'll take a little look at growth versus value stocks and how they've done and kind of what to expect and what's outperforming. The Federal Reserve's outlook in their comments last week, they've been causing quite the stir. And we'll take a peek at the S&P 500 and its resilience. It's really been resilient amid global tensions. So also try to highlight what to watch this week in the markets. And I'll give you a few closing thoughts. So to start out, the Middle East has been in the news, as you know, and it's also the future of monetary policy. The Fed has been talking about rate cuts for some time, and then they stopped, and now they're not talking about cutting. They got hit with some high inflation numbers. We did, and so that's had an impact on the market. Took away some of the juice that we've been seeing. The U.S. market indices were already kind of processing the higher inflation numbers. And then the rate cut probabilities just keep going down. So that's something to keep an eye on. The overall S&P 500, let's see, the S&P 500 declined a bit. You can see the chart there. It's a pretty dramatic pullback, which is what I've been waiting for. And then the NASDAQ 100 fell. You can see that chart as well. Those are if you just look at the upward trajectory of those charts, you see that it's been a crazy market in a good way if you're long the market. And this is the Dow. The Dow has had a little teeny tiny pullback, but mostly it's staying on track. So next, U.S. stock markets and major earnings. And whenever earnings season comes along, stocks tend to they've been pretty orderly over the last couple of years, especially with all of the tension and pressure from potential wars across the country, the world. So anyway, last week, American Express had a good result in their earnings. Travelers' results were less than desirable. And what's been happening, if earnings are good, stocks didn't move up a whole lot, but if there was any weakness or in the numbers or the guidance, we had a pretty punishing experience in the valuations. So these are, again, these stocks, when a big stock has a major pullback, it has an impact on the market, and that's what we're starting to see. So growth pullback. If you ever watch growth versus value stocks, that's what a lot of folks do. Good for you. Let's just click on this little. This is a good article at Investopedia if you want to understand growth versus value stocks. Let me go back. So there's a link. I posted this at Bayrock Financial. You'll see this post. I'll have a link in the description of the video as well. And the video will be in the post. But anyway, that's just a good article if you want to understand growth versus value stocks. Value stocks did better last week than growth stocks. But as you saw in that chart, growth stocks have just been on a rip roar. So that's to be expected. Israel did retaliate against Iran, although it was not exactly a David and Goliath type smackdown. It was much less aggressive. Anyway, that's something to keep an eye on. The futures markets, I watched the futures markets, and the night that happened, there was a pretty big pullback in the futures, but by the time the day rolled around and the market opened, it wasn't nearly as big. So Treasury yields are really something I've been watching. Basically, we've seen 3 consecutive weeks of rising rates. The 10-year is the one we keep the closest eye on. And so that's something to watch. It's had an impact, obviously, on the market, and it will continue. Fed comments. The Fed does a lot of jawboning, a lot of talking. And it's funny, when the Fed starts talking about lowering rates, the impact on the market is significant, even more significant than when they actually do lower rates. And the vice versa is true. When the Fed starts talking about not lowering rates or even potentially maybe raising rates, which is what we keep hearing because of the inflation numbers coming in so hot, that has an impact on the market. Just their talk, their speeches, and they do a lot of talking. So that's something to keep an eye on. The S&P 500, as you saw in that chart that I showed a minute ago, it's been very resilient in spite of lots of turbulence around the world. So it's been an interesting thing to watch the S&P 500 be so strong, so much liquidity in the markets, because the government is printing money and spending money, and that is causing inflation. And it has caused quite the increase in asset prices. So it is very, very certainly time to be watching the market for the kinds of pullbacks that could be painful and unexpected. Painful because we've just had so many months and years of relatively really good returns. So if the sell-off does continue, which it doesn't look like, if you look at today's charts, you'll see that the market's doing quite nicely at the moment. Well, the Dow was up 450 points a few minutes ago. It's up 383 points right now. So we'll see how it ends. But we'll keep an eye on that. The 50-day moving average is one that got breached. The 50-day got bounced on, and the 200 is a long ways off. But that's what we watch, is those moving averages. Big tech earnings this week is going to be I think the Tesla, reports tomorrow. Tesla has been hammered. So we'll keep an eye on some of the big names in the big tech, and those will clearly move the market one way or another. So the bottom line is interest rates are higher. Inflation is more stickier. And there's lots of aggravation going on around the world with conflicts. So it has been a long time since we've seen a really substantial pullback in the S&P 500 and the market in general. And so year to date, it's interesting. The S&P 500 is higher by above 4%. This is not exactly true today. Today, it's maybe not. But last week we had a 3% sell-off, and it's still, the point is the S&P 500 is still about 4% above where it started the year. So that's about it for this April market update. You can read and click on the links that I posted in this post for this video. And also I want to mention, if you haven't done so, we do have a new YouTube channel. It's my personal channel at Jim Munchback. It's on YouTube at Jim Munchback. And Munchback has an H on the end. So check it out. Feel free to subscribe if you like these kind of videos. Hit the like button. Hit the little bell if you want to be reminded and notified when I do more videos on the channel. At Jim Munchback. Munchback has an H on the end. So I'll see you next time. Thanks for watching this market update for April, year of our Lord 2024. I'll see you.